Governments are just waking up to the fact that they have no input in terms of impacting Bitcoin whatsoever, and they're moving from thinking, "Oh, we're going to Bitcoin," knowing now that they can't ban Bitcoin, to understanding that it's a fear of missing out or FOMO. The countries that hoard and mine Bitcoin the biggest and the fastest are going to be in a much better position than the latecomers. That's the current position amongst various governments, except for in Europe, where they are literally brain dead, where the EU is coming out and making it clear that they're not interested in participating in the 21st century economy whatsoever. They died. The only thing, but they haven't been buried yet. So that'll come probably in 2022, because I noticed that the euro is going to
Mhm.
be parity with the dollar and heading to new all-time lows, probably in the 60-cent region. So the entire EU can be flushed down the toilet because the leadership there are bureaucratic, sclerotic morons. They can be just disregarded entirely. I think Elon Musk will probably buy France. Sure,
You
why
love
not?
free speech.
But Twitter was
You
being manipulated by folks that were against free speech. And Elon Musk recognizes that free markets and free speech are part and parcel with vibrant capitalist free market economies, and he'll bring that to Twitter. And we're going to see a much improved Twitter, and I probably go public again in 2 or 3 years at two or three times the valuation he took it private. Well, you come to Bitcoin who you are. If you're somebody who's into education and you're a professor and into monetary history, you write a book like Dean Amus. If you're somebody like Michael Saylor, who is in the software business in Virginia, who's kind of close to the center of power in DC, who does, I would imagine, some contracting work for the government, you would have some comments about the U.S. government. Michael Saylor has also said he sees Bitcoin as being world reserve asset and the U.S. dollar as being world reserve currency. Now that's I never understood that argument. I don't think that argument makes any sense. Nobody who's looked at it says agrees with him on that, and that's not going to be the case whatsoever. The dollar is completely being destroyed. It's being flushed down the toilet. The price is at a high relative to the last few years of performance, but usage amongst global economies is dropping. It's under 60%. It'll soon be under 50%. And we've seen a major sea change in the
Mhm.
last few months,
Yeah,
Daniela, because we went from a 40-year bull market in the bond market and a
that's right.
40-year bull market in the, let's call it the Reagan Thatcher era of deregulation and financialization. We are now in a new era, which is going to be driven by commodities, right? Russia basically called time on the era of
Yep.
financialization, and we're now on a commodity based global economy. The ruble is reflecting that. It's trading at some recent highs, as commodities take center stage. And the ultimate commodity, the commodity that Paul Tudor Jones called the fastest horse in the race, the impact is huge. As I've just been saying, the transition from financialization to commodification is underway. So Russia is demanding payment for gas in rubles, and the EU was reluctant at first, and they've said, "Well, we're going to do a runaround this particular stipulation by going through some intermediaries, so we're not really doing it in rubles." But now they're saying, actually, we're just going to pay in rubles, and this is what giving a lot of strength to the ruble. And so Russia is now talking about tying the ruble to gold, having a gold-backed ruble. And I also talked about China at that time. I think China and Russia, Iran, and the other BRIC nations are all in a good position
Yeah.
now going forward. They're all commodity based. And this idea of tying currencies to gold will become much more talked about in the near future. Russia's obviously come out and said it now. China is still, I think, going to come on board. We could see, a joint effort to tie those currencies to gold. So yeah, this is what's happening in the gold market, and it's not a good look for the U.S. dollar. Their position toward NATO, their position toward various geopolitical events that are going on. They have not been hiding their thoughts at all, and now after getting to the point where they felt that their message wasn't getting across. We now have entered a new era, and there's a conflict in Eurasia. And but this is should not be a surprise to anybody. But what's remarkable is that the response of those who are clinging to the world of financialization still think that they're going to print their way out of this problem, right? So the central banks still think that, you know what, we just need to print more money. People are saying, but they don't understand that actually that just causes the inflation that's empowering Russia. The tactic from the Russian point of view, if I can put myself in the mind of the strategists in Russia, is that look, everybody against Russia is going to fight us by printing money, which only makes our commodities worth more in value and makes the ruble stronger. So how bring it on.
So, Max, how far away are we from the demise of seeing, the US dollar no longer the reserve currency of the world? And what replaces it? Is it a basket backed by commodities? Or what does it look like for you?
Right. So you go from a unipolar US dollar reserve currency to a multipolar world with a few different currencies out there. So you have the dollar, which will be a fading currency. You have a gold backed ruble, which is going to be aligned with China, Iran, Brazil, the BRIC nations. Well, I think I've pointed out. So number one, you don't have true price discovery in gold, right? The price, as we see, it doesn't really move, even though the inflation is absolutely out of control and the money printing is out of control. It's gold is not moving because you don't have genuine price discovery in gold because there's too much of concentrated in a
But
too few
well, it is
hands of.
moving, but you want leaps and bounds. Is
No, it's
that
not
the kind of
moving. Over
move you
10
want?
years, it's done nothing. It's at 0% in 10 years. It's been dead money for 10 years, Daniela. That's dead money. I mean, it's underperforming cash. It's underperforming negative interest rate sovereign bonds. It's probably the worst. It's horrible. And so you don't get any price discovery. And the industry, that Frank Juster represents, a point made in that debate that you had a year ago with these two, Michael Saylor made the very excellent point that the industry itself is constantly selling gold, and they're not putting gold on their balance sheet. They're not hoarding gold. They're just gold salespeople. They talk a good game, but they're not
Right,
actually for
right.
gold in that way. The industry has a long track record of dumping its own product and manipulating the price of its own product. So the industry itself is corrupt and nonsensical. So it's just, if gold was free to trade based on what's happening in the inflation environment, that would be a different story. But it's not. And now you've got a competitor with Bitcoin, which is eating gold's lunch. And second of all, the mining of gold, I got to the point where I couldn't accept it anymore. It's too toxic. It's too poisonous. There's too much slave labor involved.